Today on the Forex Market Preview, I'm going to show you the number one reason why traders lose money in the market. We're also going to talk a little bit about the syndicate and the nearly 300 pips that we made this week, and we're also going to look at a couple of trades on the euro and the pound, and also one on pound New Zealand that's coming up that could be setting up a nice little Gartley pattern for us. All this and more on today's edition of the Forex Market Preview. Well, welcome back, everybody. My name is Jason Stapleton. Thank you for being here for this edition of the Forex Market Preview. If this is the first time that you're joining me, thank you again so very much for doing that. And if you are one of the, well, we've got 15,000 subscribers now on YouTube. I think that makes us, if not the number one, then doggone close to the number one YouTube site for Forex trading in the world. And I'm very, very pleased, and I'm very grateful to all of you guys who continue to come back and watch the videos and leave me comments and are support to me, and that's just great because this is all free. So I appreciate you guys doing that. Today we're going to talk about a couple of things. We had a great week in the syndicate. First of all, I'm going to be talking about two things today that you may or may not be aware of. One of them is the syndicate, the other one is the private client group, and I cannot tell you these stories without telling you about these particular subscriptions that we have. And instead of belaboring the fact and putting an undue burden on my employees, if you guys have questions about those, links to both of those are underneath this video, and you can check both of them out. But the syndicate, I started a new thing this week in the syndicate where I'm putting out update videos, and I try and do one a day. Basically, I think I didn't make it for Thursday this week because I had something else going on. We're getting the new studio ready to go at Trade Empowered, and but we followed a couple of trades. And if you guys remember back to last week, I talked a little bit about the pound trade, which we're going to look at just here in just a minute, and talked about how I thought the pound was weak and how it would probably be a pretty good selling opportunity. Well, in the syndicate, what I did was I took that a little bit deeper, and I showed basically where I was looking to get short and where I was looking to take some of my profit targets off at, and we played that through. I also showed a 26.18 trade on the Aussie and also a trade on the euro dollar, which was a trend continuation trade. Now, all of those ended up paying off, so it was actually a really good week for us. We made just short of 300 pips in the syndicate, and that's not bad for $20 a month. What was interesting was during the private client group session that I had on Wednesday, I ended up talking with those guys, and I said, well, I think I'm going to get stopped out on this euro-dollar trade. And I made a special point of saying, it doesn't matter what I think. Now that my money is at risk, I'm not going to change my decision. And we're going to talk a little bit about that because that is what I think is the absolute key, critical, number one reason why traders lose money. Is that they start modifying their trading decisions and they start making trading decisions after their money's at risk. And that is absolutely, positively the worst thing that you can do as a trader, because what you're doing is you're making decisions emotionally. If you haven't decided when you're going to move your stops or how you're going to move your stops or if you're going to move your stops or targets before the trade gets placed, then you shouldn't be messing with them afterwards. I get sent emails quite frequently from traders, or I used to. I think Darren gets them now, but quite frequently from traders who said, look, I'm in this position and it's gone against me 200 pips. What should I do? And the question is always right back at them is, where are your stops? Where did you intend to get out of the market? And if the answer is, well, I don't know, I didn't have a stop in, or I was kind of eyeballing this, but we blew right through that stop, and so I'm not sure what to do now, well, then the answer is always the same. It's get out. If you don't have a plan, if you don't know where you're getting in, you don't know where you're getting out, then you don't have a plan to trade. And when you follow a plan, it pays off. And let's talk a little bit about that by taking a look at the chart here. We're going to hone in here on pound dollar, and I'm going to take a look at this. Now, if you remember back from last week, again, I leave the analysis up so we can talk about it later. I talked about this press up into this previous structure level around 65.85s, okay? Now, if I look left, why did I select that area? Well, look at the structure, previous structure. After we violated it, we broke back down the other side. And if you remember from last week, if I could just take you back a little bit to last week, we talked about, and let me just delete this so that we don't have the confusion of having these lines on our chart. We talked about how the market held this level and then we broke up and then immediately, boom, the market went back the other way. And I said, I think this market is weak. I think the pound is going to go lower. And then, of course, Monday came and we rallied right back up into that previous structure level. And what I told the syndicate members was, and in the new video I put out, is I said, let's watch this 618 retracement. Swing high to swing low of this move. Let's look for that 618 retracement and look for opportunities to short around there. And sure enough, the market popped up in there and then we rolled over. I said initial targets, you're looking for somewhere around 64.80s, which is right here at the previous structure support level, which we got. And that's about 110 pips of profit in there. So very, very, very nice trade. A wonderful trading opportunity. We're now well underneath this previous support level. So we've got a couple of options here. We can wait and hold our position, look for additional targets around 6400s, and then again down here around 6325s. Or we can wait for a rally, because the same thing is potentially going to happen here again. Market's broken structure. You see how we held that line? We came down, tested it 1, 2, 3, 4, 5 times before we finally rolled over and achieved new structure lows. If the market, and this is a big if the market will rally back up into previous structure support, which should become resistance, you're going to have another selling opportunity. And we'll be watching for that in a trend continuation down to here. Now, I won't be messing around with that because it's still got a position open here. So we're going to let this thing ride, look for targets around 6400s and around 6325, 22s area. So expecting this market again to continue lower. But I don't know if we're going to go directly lower, because we're already, if you look at the RSI, we're already under, we're almost under 20. So we're basically oversold here. And the market may do a nice little pop back up into 6480s before we end up rolling over and going lower. And on the flip side of that, it may just go north and just continue to go north, and that may be the absolute lowest price we see. But I think, given the weakness that we've seen here, that we're going to see some continued downside weakness on the dollar. I'm sorry, on the pound. Now let's switch over to the euro, and I want to take you down. Normally we don't go on to the lower time frame charts, but I want to take you down to the 60-minute time frame, because I want to talk to you about what we talked about in the syndicate this week, and I want to show you this trading opportunity. Basically, what we were looking at, what I was looking at, was the way that this market was rolling down. We had this support level here that was violated there, and then we violated this support level again here as the market dropped. And I put out to the traders, I said, this is a very nice risk-reward trade here, because you have the market breaking structure, rallying back up into previous structure support, should become resistance, and I said you've got a nice area for your stops to go right here above 36.87s. Ended up shorting the market there. The market traded sideways. We came up back up in and retested that area one more time, and then the market broke down. And this is what happened. I believe this happened on Wednesday, because we were getting ready to, I was going into the private client group, and I was looking at this candle right here. And let me move my cursor so you can actually see it. And actually, let me just get rid of my cursor here. Just make it invisible. Okay. So I'm looking at this candle right here. The market blew down and then got sucked back up, and look at the structure that we're sitting at right here. And I said to myself, you know, I'm probably going to get stopped out on this trade. This market looks, acts, and feels like it's going to go higher. But I told the traders, I said, I'm not going to move my stops. I'm not going to move my profit targets. I'm not going to take my targets off early. I said I'm going to hold this position, because that was the decision that I made when I placed the trade. And this is what is really critical. This is what I want everybody to understand, is that I cannot count, and I told the private client group this, I said I cannot count the number of times that I was sure the market was going to go against me. And so I ended up covering my position only to find that the market continued lower, continued higher, and I would have hit my profit target. It would have made me a lot of money, and instead I'm out for break even or for a very small profit because I decided to modify my rules and make an emotional trading decision based on what I was seeing while my money was at risk. I've become more disciplined over the years, and I don't do that anymore, at least not that I'll admit. It's a rare occurrence when something like that would happen. I'm not perfect. But my point being is that this is the number one reason why traders lose money. It is the number one reason, is making emotional decisions after you put money at risk. You see, all of the trading decisions that you're going to make, all of the decisions to buy or sell, when to move stops, when to move your profit targets, how to adjust your position while the trade is going on, all of those rules need to be written in a trading plan before you ever place a trade. Because once you place that trade, it's like you're viewing the market through a prism. You're no longer acting and thinking in a rational way because you've got money at risk. And it clouds your judgment, it clouds your decision-making process, and it destroys trading accounts. And sure enough, this market traded back up higher. We came back up in and tapped the previous resistance level, and then look at what happened. The market just took a nosedive. And I know a lot of you kick yourself for this. You're frustrated. You see something like this happen. You clear your profits. You clear your profits off for a small gain, and then you watch the market just fall off like a waterfall. And you're kicking yourself, and you don't know why you did that, and you wish you wouldn't do it, and you make a note that you're never going to do it again, and then sure enough, you do it again. And I think a lot of it comes from a lack of discipline and a lack of experience and a lack of knowledge about the markets. And that's why on the 18th of this month, I'm going to be holding, 18th of February, I'm going to be holding a one-day only webinar. It's not a webinar, it's a broadcast because we're going to be shooting it from our new studios here at Trade Empowered. And I'm going to be talking to you about structure trading, about technical analysis, and I'm going to be sharing with you some of the secrets that I've learned over the last decade that help me maintain discipline and help me understand and make good trading decisions. I'm calling it Into the Gray is going to be the name of the production that we're putting on, and it's going to be, like I said, a half-day workshop, but it's going to be like nothing that you've ever seen before. None of this hokey screen share stuff with bad audio. We're going to put on a great production for you guys and give you an incredible amount of quality, and we're going to do it absolutely for free. And so if you are enjoying what you're seeing here and you're enjoying what we're doing and you're learning a lot, and I'm getting lots of comments from you telling me that you are, then you need to be at that event. And I've got information that'll be coming out this week that'll allow you to register for it. And you can mark it on your calendar now as the 18th. We're going to be running it starting at 8 a.m. 8 a.m. Central Time. And I'll get you more details later, so don't worry about writing it down. But it is going to be an eye-opening experience for many of you who have never had the chance to actually train with me over a period of several hours. So I look forward to working with you guys on that, and be on the lookout for your inboxes and for more information about that in the Forex Market Preview. Now, let's hop back in here again, and we talked about the euro, we talked about the pound. The Aussie dollar, we had a 26.18 trade that I won't cover, but there is a look here at, let's take a look at Euro New Zealand. And right here, what we've got is, we're going to go out to the daily chart. Again, bigger time frames here. We're going to take a look. There is a chance that this market may be finding some resistance here. We've hit this is a 618 retracement here of the initial leg. Okay, and this is a 618 retracement as well, right here. So we've got a couple of 618 retracements, and what we're going to look for is a projection of a 127 extension. Whoops, let's grab the right tool. A projection of a 127 extension. There we go. Down into 160.10s. And that's going to give us a very nice looking Gartley pattern. Now, I don't know, we probably won't get there this week, but we'll keep it on the radar here because it would have to take a pretty significant nosedive here to get down to that 127 extension given the average true range of this market. But it could happen. So we'll put it on the calendar right now, Euro New Zealand on the daily chart, looking at a potential Gartley pattern setup. Well, that's going to do it for this week. Like I said, I only showed you one trade really for this week, but we spent a lot of time training, and talking a little bit about the decision-making process that you do in the market. And if I could give you just one thing to take away for this week, it's pay attention. When you're in an emotional decision, when the market is moving against you, when you're close to hitting your profit target but haven't quite gotten there yet, what are you doing? How are you reacting to that? Because if you're doing anything other than following your rules, I can promise you one thing, it's costing you money. And it doesn't have to. So work on that discipline, pay close attention, and we'll meet you right back here this week. And for those of you who are in the syndicate, I'll be sending out another video on Monday, and we'll be looking at the market and basically growing off of or expanding upon the stuff that we talked about here in the Forex Market Preview. Until then, good luck and good trading. I'll talk to you soon.